Hello, ladies and gentlemen. This is JVFS Academy. I want to discuss and also share my knowledge in the field of Forex. Forex is maybe I was talking about a long time investment or business because there has been a lot of changing of things like changing of trade by barter, talking about rendering, exchanging goods for goods and services for services in those days. But now, if you are a farmer, now you can travel out of the country and go and render service there. Then perhaps those who are into mining can come to your land and come and mine, and then in the process there will be a lot of changes. So today, I want to discuss about forex and some terminologies for beginners. If you have not been trading before and will be your, perhaps you are just seeing this video, you're just hearing about forex or you have been reading about forex, I will try my possible best to really reduce the terminologies, trying to explain it for your understanding. Now, if we look at the definition of forex is about foreign exchange. You are buying one commodity, one currency against the other. You are selling, when you are buying one, you are selling the other. So this is Erica. Let me go to Euro USD. This is Euro USD. There's a trade on right now in a demo trading. In a challenge, it's called competition challenge trading. So I'm going to really explain what we will be discussing here to this time now. Let me look at talking about forex. The color, let me use red. Okay, right. Forex, talking about forex. Don't mind my right up here. So let me look for a way of cleaning it. Let me clean it now. Clean everything. So let me use text here. So as you see it, so forex. Well, talking about forex. So what is forex? It's about foreign exchange. If you look at this is foreign. This means exchange. So we're having Euro USD. If you look at Euro USD now, this is Euro USD, and this is Euro USD. If you look at it here, you can see that we are talking about looking at this here. This is showing buying. If you are buying euro now, that means you are buying here, and you are selling dollar at the same time. So whenever the price is going up from here, is going up, you are making profit. But if you are buying here and the price falls down, that means you'll be in loss, or it's called drawdown. Now, I will be talking about drawdown, shortly. But we're talking about drawdown is more of like your floating loss when the price is moving. But let's take it slowly and then let us move gradually. Now, let's look at the times. Now, there are some times talking about orders. What else about orders? There's buy order, like buy limit, buy stop, sell limit, sell stop. Now, when we talk about sell limit, we are talking about putting order, placing an order above the current price for you to sell it. So now, when we look at the point of selling, meaning now that you place your sell order here, meaning from here, this is your sell limit order. That means you are waiting for the price to reach to this point before you sell. So if price move to this point, the sell limit order will trigger. Let me place this for example here for you to see the what I'm talking about. Now, I'm going to place sell limit order here. This is sell limit order. As you can see it here, is here. That means I'm waiting for the price to move to this point before it will trigger. Now, it depends. If the price does not reach here, that means there will be no trade. But there's what I call sell order, which is to execute the order immediately when the price from this current price. That is sell order, meaning I can just move this and sell here. This is the point of selling. This is it here. Sell order here. So that means I want to sell at this current price as at this time. Now, if I sell now and the price moves towards down and price comes down, I'll be making profit. But if the price goes up, I'll be losing my money. So now, all depends how much volume do you want to sell and how much you want to buy. So you need to first of all understand the sell limit. This is sell limit. Buy limit is to buy below the current price. To place pending order is not really order. You are not trading immediately. When you are talking about limit, buy limit means you want to buy below the current price when price get to that level or at the point. Now, buy limit is this is buy limit. Let me place it now. You right click on it and then you see buy limit. You click on it. Now, when you place the buy limit is going to will be hanging around. And it will not trigger until the price get to that point. So now, buy limit is to buy below the current price. So your order will be pending, while this one is still pending too, because it's waiting for the price to move to this line. So that is how we talking about order. That is order, different orders. Buy limit, sell limit, buy stop. Then let's talk about buy stop now. Buy stop is this. Most of the people that use buy stop, they try to avoid, manipulation in the market, and then they are anticipating for the price to move above the current price. That if it moves above it, that means price is likely keep moving up. But if it does not reach to that level, that means current price is going down. So why people are using this buy stop most of the time is that they don't want to jump into the market immediately. They are waiting for the price to move above a certain level, that to show commitment that yes, actually the market is having kind of pressure to go higher, so they will buy above the current price. One thing about this is that some people will lose opportunity of selling, while some people will lose opportunity of being manipulated, in the sense that when you place, for example, now let me quickly use this. This is horizontal line now that is used to show resistance or support, but later on I'm going to discuss about this horizontal line. This horizontal line most sometimes can be confusing, and can also, you have to know how to use it. You don't just use it anyhow, because market has a way of passing through it and being breaking it and convert it to another order. I'm going to explain what I mean by converting to another order, meaning that it will turn support to resistance and resistance to support. Before I move there now, people will put buy limit at this point. At this point here, they put buy limit here, so that they're waiting for it, that if price mistakenly go above here, that means the tendency is very high, that is going up here. It's going to rising here, going up. So that means the price they will start making money. But sometimes market has a way of triggering buy stop here and then bounce back to this level here. There's this candle here. This is according to fractal support. This is fractal support currently now, meaning that price reversed at this point here. So it can still trigger buy stop here and then return back to this point, to this more of like demand zone, according to those who are trading demand and supply, meaning that price reacted, created support demand zone here. So there's no really test of this demand zone currently, but let's forget about that one. But let's talk about this buy stop here. So buy stop is to put buy stop here. So once price is here, it will trigger it, reach here, and then keep on making profit. But if it trigger it, and then it can come down here. But some people believe that the price will still come down. So instead of to jump into the market to buy here, so if you buy here at the current price, market can pull down and pull the price down, and the price return back to this zone where it before, and then they'll be in drawdown already. But if they put their buy stop here at this point, then there will be no triggering of the price, that will move the price up. So that is by that one. Then sell stop is to sell, put pending order below the current price, so that when the price get to this point, it shows that it's likely to be going down. So then once it's triggered here, the price will start reading. You will see your balance showing the amount of volume you buy, you set as your set stop. So we have this all these pending order. They are pending. Normally, it is called. Let me put it here. We're looking at. Let's make it buy stop, set stop, buy limit, and sell limit. So all these, they are pending orders. So if you hear anything about buy stop, sell stop, buy limit, sell limit, they are pending orders. They are not market execution order. So that means you're not executing it at all. So you can see it here. You can't see the sell limit here. You can't see. Can you see it here? You can see buy here. This is market, or this is when you want to buy it at this current price. This is sell. Want to sell at this current price. But if you want to consider buying above the price here, meaning that it is going to be buy stop or sell stop. Sell stop is that you want to sell above the current price. Sell limit is about selling above it. Why buy stop is to buy above the current price. Then sell stop is to sell below the current price, and buy limit is to buy below the current price. So the definition, you need to understand the terminologies very well, and then to know so that you don't make that mistake. Now, a lot of strategies are out there that people usually use. They don't usually use market order. They don't use market order. For example, now let's take this for example here. There's some people can consider this as support. Let me use this the rectangular R2 here. So this is it now. Yeah. Now a lot of people believe that this point is a very strong zone where price will be reacting and be bouncing back. Now, why is this so? When price close above here in this time frame, we're in 1 hour now, from here it broke this point here. This here, it closed above it. That is breakout. Now, price returned back to this place to show the point that here is a zone, a critical zone here. So this zone now acting as support. Now, one thing about this is that now a lot of people will be thinking about buying at this point again. Buy, then price return back, then again buy, and this buy it broke the structure of this structure here, meaning that it created higher high. Now from here it make another high. So if you look at this now, there's a sign that's supposed to come back to this point here, and then reverse back up. So we are still under sell stop and buy stop, sell limit, buy limit. Now I'm giving you examples here why people are using these penny orders. Now, a lot of people will put their stop loss, will consider using this place as their set stop here, and then their take profit will be here. So people will put their order here, so because they believe that once it moves below this point, meaning that it's changing to the downside, meaning that it's going down. And if you look at this point here, I want to show you now. This point is showing some level here, and now there is something happening right here now. If you look at it here, from this first point here, 1, 2, 3, and that is to show support, but market went below, I broke it back again. Now when it reached here, it returned back to that point. That point is now reacting now. So people are likely being confused because there's another point here. If you look at this here, another point is still here. There's still point there where price can still go back and then react here. So why people use this sell limit and buy limit is that there's a strategy that they will put it here, they put the stop here, and then before the price will trigger it, if the price got to this point and reverse, it will not trigger. But if it touch this place, it will trigger it. Then if it goes back up before, they will be losing. But they believe that it is likely that it's going to be used force, and the process they will not be on the screen. So they put it here, put their sell order here, and put their stop loss perhaps around above here, trying to catch up with any possible move that could go below here. So while they were away, the set stop was here, and it triggered. Once it triggered, then they were in profit. But if it triggered, then it reversed back up, and then hit their stop loss, they will be in loss. So that's one of the strategies people use, like this place too, like this here too. So if you look at it here now, people, you can put another sell stop here. Some people are still believing that it can still go up. So if it reach here, it can react here and reverse back up, and that means it will not trigger, and then there will not be in loss. Instead of them to sell here, to sell above here. So now, those are the things about it, about paying orders in the markets, common orders that people use. So you need to know which one to use. Now, this trade currently we was executed here at this point there is at buy as a market current at that time when I make the order, it was really clear about it. It was clear indication that this thing is going to go up, because there is market is still in the uptrend, but it was massive move which could create confusion to those who are looking for what they call reversal trade. So if I had opportunity to trade it, I wish to trade sell here, and this sell here will have made a lot of money here, but there was no fund. But this is about 106.18 movement. If you calculate it from here to here, that means 161.8 movement, meaning that it has reached the level according to this strategy. This strategy is showing something here. Although market is at the top of the market, if you look at the movement from this low to this here, is a very, very long journey. From here, days, it is weeks. These are weeks trades. So now, according to this channel, this is overall according to this. Let me chip in some. This is strategy, more of like strategy. Market has been showing breaking structure on the upside. Now, if you look at it, markets move from here. Let me use here. From here, it move up to this point here. Okay, then there was retracement. Then it make another move. Then these are the waves. How the market moves. You can see the waves in 1 hour. I had to reduce it so that I can see it clearly. Now it's moved again. It broke this structure here and make higher high, and it's reverse again. So it make a reverse, not reverse. It retrace. It calls it retracement because it's still respecting this level here, the level of higher low here. Then it's also move to the upside, but the way it move, it not move at once, but a lot of ranges, started to show face here. So if you look at this is pure ranging market. There's just prices just bouncing from here to here, from here to here. So due to the new ending of the year, last year 2022, so there was movement here, price moving from up here, down, up, down, up, down, up, down, up, down. So it will get to this point too before it's move above here. It's move above here and then move below. These are strategies that all those ICT, those guys they used to trade. So it know that there will be a lot of liquidity here. So that means people will put stop losses here. So when it's move above this area here, this from here to here, if you look at it now, from here to here, it has moved a lot. So it moved in that range, then it broke to the upside. Then people will are waiting for the retesting. Then before you know it, price go below this, if you can see this place, this range here, so it broke below it. Now, with what is likely to happen now is that the price will likely make very long move to the upside. That is to show that there is high potential that price will go up. But if price has changed to bearish market, that means the price will make some correction here. You can see the correction here. This range make correction, but I suspect anything that will make this 1 hour candle to close above this line here. If you look at this line, the line has shown that it's acting as support, resistance. It broke it, then it come and turn it to support. It was reacting. If you look at it, it was reacting support. Then when it broke it, now it's now reacting. But this is more of like high here, this is low. So for it to keep on going down, that means this movement is supposed to make a lower low. So the way it's showing now is like it's showing that it's going to range here. After ranging, it's likely to go up. Now, the bigger picture is that according to the strategy, this is more of like rising channel, what they call channel. But before we move that, let's talk about this is more of like a parallel channel, but there's a bit slope expanding channel somehow. It's slant, expansion, not really parallel, because it's move above, it's move below certain level here. The direction is acting. So if you look at these waves now, what are you waiting for? What traders are waiting for is this move, about 400 pips move to the upside. So if it failed, that means it's likely returning back to this. So I'm analyzing the market, the whole market now. So if it's not here, it's likely moving down to this point here, where the market it broke here, then it has not even returned to that level, to that zone. But on the looking at it now, what should we talk about now? Should we move on the issue about others, and then let's talk about stop loss. Stop loss. What you need to know about stop loss is that stop loss. Let's look at stop loss. Stop loss. So what do you consider stop loss? Stop loss is to cut short your losses. Meaning when you are not on the chart, your stop loss will, this is a sample of stop loss. I will show you a sample of stop loss. This is an entry, buying entry. This is stop loss now. So it means that whenever the price moves to this point, it means that this is about 100 pips. If you calculate it now, it's more of like 90 to 100 pips. Now this is 90 pips. Now this is stop loss. Why is it so? It's more of like it's swinging. This is swing trading now, according to this. So it means that price can move to this point and still go back up, according to what we are seeing now. So this ranging market, the expectation is that the price can go back up here to this point. But when price comes to this point, then there will be losses. for this entry. So this is stop loss. So I can adjust it to go up a bit, but it will be too tight for the trading. According to the trading that is on now, currently, this trading is called swing trading. Why is this? And that is the price is so large. You see, it's 90 pips to get what? How many pips? To get 371 pips. So that will be more of like 3 point something plus reward. Want to lose this to gain 3 times of the risk. So based on the risk RR, risk and reward. We're talking about risk reward ratio. Risk reward. Okay. Ratio. So it is more of like it's 3 to 1. Let's say 1 to 3. 1 to 3. Meaning that losing one to gain 3. So anyone the price reach, if price get to this point, if the price got to the point, so this is stop loss, then this is take profit. Now let's look at take profit. So take profit is here because whenever you are buying at cheaper rate, when price is rising, you are making profit. So I'm expecting the price to rise to this point, but the time it will get here, it may take 2 days, 3 days, 4 days, 5 days, 7 days. It does not matter. It does not matter at all. The point is for the price to get to where it's meant to go. Like you are really anticipating that it will reach. So if the price reached here, then it will trigger it and it will close the trade. But I may decide to close this manually too, to make any little amount that market is showing me here now. So now, why is it? This is swing trading, so it's not day trading. So day trading is to trade, with in the range of maybe less than 24 hours. Why scalping is for within maybe 2 minutes, 5 minutes, 15 minutes, 30 minutes, you are out of the trade. So scalpers are different from day traders, and day traders are different from swing traders. Swing traders are different from position traders. Now, let's talk about different types of people in the market, different kind of traders in the market. Let's look at different traders in the market. So let's look at this. We have different. Should I open another? Okay, let me open a clean sheet now. Okay, let me use this. Day trader. Day trading. Let's call this swing trading, and then position trading. So if you look at it now, day trading are those who, day trading is more of like trading and ensuring that your orders are closed before the end of the day. You may start the trading in the morning and close it, before the closing of the candle. Meaning, let's look at daily candle now. This is daily candle now. If you look at this now, those who place their entry here, the market move down to this. So at some point, they may close the order here. They may close the order here, and they are done before it closes here. So they already take their profit. While swingers, they sell here, and then they are still in the market. Where you see them here, they are still in market. Those who sell here, those who sold here in the like yesterday, in the morning or afternoon, anytime, either here, wherever here, they may have sold here, while their stop loss might be above here, hoping that the price will move down more and more. So they are waiting for the price to keep on falling. So they might leave it for 2 days, 3 days, 4 days, even till the point of a week or 2 weeks. So they might be here, market will just be moving. While day traders, they're only taking their losses, they are taking their profit too. So that's how it works. So if you look at it clearly now, those who are into day trading, they are sleeping now. Swing trading too, they are sleeping. But those who are day trading, there are different sessions. So day trading, so people have taken buy here and have closed their profit here. They're already out of the market and they're already done for today. And maybe waiting for tomorrow again before they place another entry again. Before it, maybe within 1 hour or 2 hours, they are out of the market. They don't stay for long in the market. So day traders are meant to trade for a few hours or for the whole day, and then make sure that they tend to close their trades before the end of the day. Then swing traders, they keep their trades open till for 2 days, 3 days, 5 days. Positions, they trade for months. They may place a trade, they may sell here, and then are still in position till now. So even though it goes up against them, they don't care, but they are aiming the price will stay here. So for a market can stay here for a longer time and can take 2 months before the price will fall back to this down here if you look at it. So they usually use monthly and weekly. So they don't in a hurry to take their profit or losses. So that is just it for that. So Asian section, New York section, and also London section and New York. So we are currently in Asian sessions now, and then before you know it, now London session will open, and after the London session, then the New York. Talking about these time Asian sessions. Now, different sessions. So there is Asian, there's London, and also New York. As you see them, now, you can see them now. This Asian session, the volume may not be much to some peers, while London too, there will be increase in volume. GBP peers will increase. While Asian JP, we're talking about New Zealand. We're talking about JPY, meaning Japanese yen, and then some movement could occur, but at the end of the day, New York is actually the hive where you see more volume, and then there will be news that would usually move market, that will move prices, and you see a lot of vibration in the market for long. For at least for potential movements, you see the movement more in majority of the pairs, because that's when the USD is the major pairs. All those major pairs. And then let's talk about pairs right now. We're talking about pairs now. So USD is anything USD is major, and then others is minor. That does not have USD. So USD card. Let's look at USD card is major pair. USD card. USD JPY. USD CHF. Then talking about Euro USD is also major pair. GBP USD. Okay, GBP USD. Then talking about New Zealand USD. Now, these are the major pairs. So the rest are minor pairs. Although we still have exotic pairs, those ones that are basic core currency, all these talking about ZAR, all those pairs. They can, call them exotic. So the spread tends to be high. That's the reason most people don't trade them. Very widespread, which will create losses. People don't want to lose, so people don't usually trade these pairs because of the way the market, the way the brokers tend to use, trying to use them to make money. So in other words, if you just buy immediately, you're already in loss, massive loss because of the spread. Now let's look at this now. Time frame. A lot of time frames here. We have monthly, weekly, daily. See it there, monthly, weekly, daily. We're talking about 4 hours, 1 hour, 30 minutes, 15 minutes, 5 minutes, 1 minute. Now, from here, all this, if you look at them now, you have to know what is going on. So, if you look at this is trending. This is trending. If you look at it now, it's uptrend. From here, each candle is showing representing daily here now. But if you go to 4 hours, you will see more candles there, and then it takes some experience before you master the multiple time frame, meaning that top-down analysis. It's called top-down analysis because you have to start from the higher time frame to lower time frame. So talking about higher time frame and lower time frame. So for you to know all this, it will take time. You need experience. Those who have been into it, if you are learners. But if you are not, let's go together, because I'm going to be sharing my perspective, my ideas in the market. Whenever I see all these things, all these signs in terms of price action, talking about support and resistance, talking about what market is doing, you should be able to understand clearly that this market here, it is this movement, according to this, may look as a change of character in terms of those who are talking about the character has changed. But to me, there's no change in character yet. There's no change in character of yet. Look at it. Look at this. Let me clear this chart. The chart is. I want to clear it because those words I showed earlier is not cool. Now let's look at this. According to daily, what is happening to this day? price move up, there was a reaction here. Price move away from that point. Let me clean this. Okay. Now this is better now. Now the price move from here. This is the resistance that I mentioned about. Price react again at that point. But if you look at the movement from year to year, it means that there was no much push. There's no more the falling of price below this point here. So market respected it. So now another point here, you can see year 2. There's one here. There's another one here now. So there's another one here. So what are we looking at now is this. Because of this, I'm not using, let me use this. The rectangle. So look at it here. There's something here. Price is reacting to now. So according to those who are trading patterns, what they are seeing right now is double bottom. Why is it double bottom? Why is it called double bottom? Okay, this is 1, then this is 2. Another one is 1 here, and then this is 2. That's confusion now. So if you are a trader, you are looking at daily time frame. As you are starting from daily now, what you see here is that this is with this from the point price broke this place, this line here. Now it has reached this point. This is 1, 2, double top. The expectation for those bearers, those who are into sell, after sales, what they're looking at now, they are looking at this. They're looking at this movement here. They want it to come down to this point here. That is what they are looking at. They're looking for the price to move to this point here. But as trend traders, those who are into trend trading, they are anticipating another movement to take place to the upside. So that means buyers are here and buyers are here too. There are some traders who are still expecting price to move to this point here. So if price come to this point there, they will buy, hoping that it will go up. Then if the price push again to this point here, they are expecting price to come to this point there. But price may never get to this point until it moves here. So there will be bulls or buyers. There are buyers in the market who will push the price and likely break this place, then turn here to support and then keep buying. So these are the points I want to discuss today. I'm going to add some points later on. I want to make it more of like interaction, trying for us to, for me to get to know, go to share my ideas on this Forex, the world of Forex. So the more you trade, the more you look at the market, the more you'll be learning. It will take a longer time. It's more of like a course, but this course does not end because there's different behavior on daily basis. So if you look at it, this is chance for buyers to enter market and keep pushing the price up. This movement, this bearish movement, is not really bearish movement to people who have experience. They know that this movement is not bearish movement. It's more of like a return back to this level, this zone here, where price will now push to the upside. But if you are looking at what time frame, you'll be feeling like market has changed. But I don't see market changing here. Market is about to prepare to buy, and the buying can swing to this point here. So according to swinging, so this is my target. This is the zones where I'm expecting price according to this movement, because we are still on the upside. So get prepared for this EU. This EU is very, very interesting. It's very simple and it's very sluggish somehow, but is more clearer to analyze than most of other peers that are not major. So like all these, we're talking about Aussie, JPY, those ones that like USD, CHF, those some maybe not have a good pattern according to the structure. So look at the market structure here. The market is likely react here. This place is is an interesting place. This place here. Let me make it clear. Let me show you this point here. This place here, there's quite something is not adding up here. So I would also look at what is going to happen here. So what's happen here is likely to make this baby fake out, meaning that it's created rejection here, then it broke it now. This rejection here will have effect here? So if the price get to this point, it may react and then continue falling or return back up to this point here. So the target is here. So this is where we are expecting the price to go. So this is how far I can go on, and I will see you some other time. I'm going to share more ideas on whatever is flowing, based on my experience. I'm going to be sharing with you. Thanks so much for watching this video, and see you some other time. You may subscribe and also share with your friends, and then I'll be talking more later about Forex. Thanks so much.